Hi everyone, it's Chad Bow on another video, and today I'm going to be talking about PayPal stock. Very much the stock at the moment. At the minute on YouTube, seems like every other video is about PayPal. I just want to give my take on it. It's a stock that I do hold right now. I'm a little bit down on my cost base, it's probably around 65, 70, but I'm very happy with the way PayPal is moving at the minute. It's just got a new CEO, which I think will be a big catalyst for this company, as it was kind of in purgatory with Dan Schulman very much. Everyone knew he was outgoing, but there was no new CEO announced, and that could be a major catalyst for the stock going forward. And some decent results. It's very clearly a business that has a mispricing event. To me, it looks very undervalued right now, and a year ago, it looked quite overvalued. I think it's at a nice position right now, and I'm building up my position. So I'm going to talk about its most recent results, its prospects for the future, its valuation compared to its intrinsic valuation over the last 5 years, and talk about my feelings on the stock going forward. PayPal has evolved as a business significantly over the last 10 years or so, primarily via acquisition. They've grew their own in-house buy now pay later service. They bought Payday, which is a Japanese buy now pay later provider, a couple of years ago. They bought Honey, they bought Venmo, and really grew it into what it became. They bought it for a fraction of what it would be worth today, and now it's one of the largest payments or type of wallet companies worldwide. They have remittances in the form of Zoom, spelled with an X. They have recurring payments, buy now pay later, merchant blending, all sorts of different things aside from just the sort of online checkout business that it used to be. Far more significant business, and while growth has slowed down, it is definitely a mature business now, certainly more value than growth. It's still growing at reasonable rates. So in the most recent quarter, we'll look at the GAAP numbers because they're what really matters. Net revenue of $7.3 billion just for the quarter. So you're seeing this kind of scale we're at here, which is why the year-over-year changes are not so significant. They're just 7% increase. Operating income of $1.1 billion. That's up 48% year-over-year. Really decent margins there. Not Visa, MasterCard level margins, but really nice margins in my opinion. And earnings per share was up 414%. That was really flipping back to profitability, or not profitability but more profitability, and that's 92 cents a share. It's currently trades for around $58. Multiply that by 4 and you're getting really quite a cheap company trading at 16 times forward earnings. My favourite metric to track with this business is total payment volume, essentially the amount of money passing across the PayPal network. Total payment volume increased 11% on a spot and foreign exchange neutral basis to $377 billion for the quarter. You're looking at around $1.3, $1.4 trillion for the year, most likely, increasing 11% year over year. That's a decent re-acceleration from Q4 2022, Q3 2022, when we were in there 9%, and then it went down to 5%. Venmo's total payment volume increased 8%, kind of lagging to the actual wider network. This was previously a massive growth engine. As I mentioned, revenue is at the high end of guidance, growing 7% spot and 8% on a foreign exchange neutral basis to just shy of $7.3 billion for the quarter. Growth absolutely in line with ours been in previous quarters, but it is worth noting that transaction revenue only grew 5%, and other value-added services were a major boon here, up 37%. This is mainly due to interest rate rises, meaning they are gaining an increased interest rate on customer balances. So just the value of money they hold for customers, they're getting massive interest rates because of this by just putting it in Fed funds or something like that. So they gained a serious amount of money on that. Not business changing by any means, but it influences the revenue numbers for sure. But generally, on a foreign exchange neutral year-over-year growth rate, this is kind of in line with where it's been, and kind of in line with where it's going, in my opinion, for the foreseeable future. The final key metric I like to follow is transactions and engagement. Transactions per active account, which in this quarter reached 54.7, growing 12% year over year. Processed 6.1 billion payment transactions, that was up 10% year over year. So it's just nice to track how many transactions, how active accounts are basically, and since Q1 2022 this has increased at a nice cadence. Active accounts is pretty much flat, and I would argue that this is reasonably, this business at scale has more than the population of the United States in active accounts at 431 million as the most recent quarter, and to get them transacting more is really what they need to do now, because the years of rapid active accounts growth are really fading, and there has been a general downtrend in active account growth. You can see 9% in Q1 2022, 6%, 4%, 2%, 1%, and finally basically flat year over year in where we are now. So they really need to eke out more transactions and more transaction volume per account, but this is really, really impressive in my opinion. I think the bear case that are often stated against PayPal are that payments and these type of fintech companies in general, it's a very, very competitive space, and that I cannot argue one bit is a very competitive space. In addition to PayPal, you have many companies that want to do their own in-house payments platforms, like Mercado Libre, for example, or Shopify is doing that. You have many companies that are in the buy now, pay later space. You obviously have, in the payment space, you have Visa, MasterCard, Adyen, Square. You have all the credit card companies. There is tons and tons of people, and it's just free margin essentially. It's a relatively low barrier to entry, obviously because there's so many fintechs popping up doing it. But I think PayPal's scale is really to its advantage, and its customer relationships does really well in terms of trusted brands. And that is a big thing for payments platforms, and it generally has really solid customer retention in terms of its clientele and its merchants. And also, people who see it as a legacy player, I don't think that could really be further from the truth. While it has been around for a while, it's not really decreased at any point. It has over 400 million active accounts, over $1.4 trillion in payment volume, which is absolutely massive, far bigger than the nearest competitor in terms of these sort of payment platforms. 35 million active merchant accounts, which is for sure not necessarily a heavy moat, but definitely a light moat. And processes 24 billion payment transactions. I think the trust element of this is really underplayed, and that is a soft moat as well. Brand equity for sure that PayPal has generated, and it's in a massive number of markets. You can send a number of currencies, and it's kind of a one-stop shop for many different payment processing or buy now pay later, whatever you want. PayPal seems to offer some sort of thing for it, even offers crypto and things like that, and looks to be generating its own stablecoin moving forward. These aren't necessarily things for everyone, but it does have something for everyone and solutions for everyone, which I think is beneficial. While I am painting PayPal in a relatively positive light, it's obviously not a perfect business. Growth has definitely slowed down. If we get that 8 to 10% year over year, I think that will be a result for PayPal going forward. The CEO situation has been an absolute mess. Management has certainly let us down on a number of occasions, but it seems while they had no succession plan, the succession plan is now in place. The new CEO will take over in 2024, and I think this mispricing event has got a huge catalytic swing out of this. For me, a business that's growing at 8% year over year, has massive scale, is one of the leaders in its space, and has excellent margins. I don't really see a reason why in today's market that should be trading at 16, 17 times trailing earnings and 13 times forward earnings. In S&P 500 that's trading at 22 times trailing earnings just seems a bit ridiculous to me. This business is trading at a PEG ratio of 0.55, far below fair valuation in my opinion. And while versus its 5-year averages of PE and price to cash flow and things like that, it's obviously well under these 5-year averages because it was less profitable previously, lower margins, and wasn't trying as hard, and was also trading at exceedingly high valuations. I think really that's what's happened here is this business, the sentiment turned against it. It went from it having a very high valuation because it was kind of a can't miss business to having a reasonably low valuation in my opinion. I don't think it is absolutely the steal of the century. This business isn't going to triple quadruple in the next year or so, but I think this is a solid business that I believe will beat the market once a couple of catalysts fall into place, which I can see happening in the near future. That's really my summary for PayPal here. Trading at 52-week lows when I think it absolutely doesn't deserve to be. I think from a management point of view, it's really starting to turn around, and operationally, it's far outperforming its valuation here, in my opinion. And I can see this business getting back to $100 billion market cap in the next, 2 years. I think that could be excellent value for money here. 16 times earnings with some multiple expansion and some further growth. It could easily be that sort of return. Of course, that's just my opinion. I'm not a financial advisor, so you shouldn't take any of this as financial advice. There's risk when buying any stocks. Your capital's obviously a risk. And you let me know what you think in the comments down below. Like and subscribe when you enjoy the video. And of course, remember, do your own research and due diligence. Don't just buy things because I like them. But I am adding to my PayPal position here. I think it's reasonably valued at this price. You may think differently. Let me know in the comments down below. I'll see you again next time.